It's that time again when the world falls in awe. Every song you hear seems to say, "Merry Vanguard, may your investment dreams come true." And this video of mine, in 1/4 frame time, wishes you and yours the same thing too. Hi everybody. As you can tell, I'm getting bored of one and the same kind of intros. So in case you haven't seen my face before, I'm Marta. I work as a designer in London and talk a lot about personal finance and good life on this channel. If you're into either, don't forget to subscribe. It makes me very happy. Welcome. Okay, so May is here and let's not go into how this happened because only COVID knows how it happened. As planned, I did some spring cleaning. Not all perfect, not all shiny results afterwards, but fine for now. So I will not answer any Vanguard related questions in this video, as talking about those changes will take a bit longer. By the way, thank you for all your suggestions with regards to what improvements I should make. They were very helpful and very interesting to read, and I appreciate them all. Luckily, we do have a comment of the month, so here it comes. Bin stickers ordered. For those of you who are unfamiliar with my budgeting videos, I mentioned in one of them getting these bin stickers after years of frustration with my neighbors mistaking my bins for theirs. They cost me less than £3 and it's seriously a bin game changer. So Bob, this is for you. Well done. Unlike me, you didn't procrastinate, you just took action. Yes! I can make you a t-shirt like this one, if you wish, to celebrate your quick decision making, and you can find my contact details in the About tab. Unfortunately, I cannot reply to your comment because for some reason it disappeared when I removed some spam under that video. Maybe it was a reply to one of those spammy comments or something like that. So I do hope you're watching this video. Thanks for your comment, and to those of you who also need bin stickers, I leave the link to them in the description. So let's take a look at my spring cleaned portfolio and my holdings. So this is what my holdings looked like last month, and this is what they look like now. So I got rid of FTSE All World High Dividend Yield ETF, LifeStrategy 60% equity fund. I still hold on to this corporate bond ETF, but only until it generates some profit, basically until it becomes green. So what is the reasoning behind those changes? For now, I'm not interested in having bonds, so all my funds within my ISA are equity funds. I'm still early in my investing journey and see no reason why I'd invest in bonds at this stage. So LifeStrategy 60% had to go just for this very reason. The FTSE All World High Dividend Yield Fund, that just wasn't a substantial investment, so I switched it to one of the 3 main remaining funds. Again, at this stage, I'm not that bothered about passive income from my investments. So dividends are not my priority. So what are my current main funds and what's good and what's not so great about them? So first things first, LifeStrategy 100% equity fund. This was the first fund I actually purchased on Vanguard, so of course it has some sentimental value for me. LifeStrategy funds offer a good diversification because they are like ready-made portfolios of Vanguard tracker funds. So the 100% one is wholly invested in equities, of course. The good thing about it is diversification and no need to put that portfolio together and tinker with it and with its balance on my own. The bad thing about it, it really focuses on US large cap funds. So in other words, the big American companies. And so if other markets perform better, then this fund will lag behind, which means I should really look into getting rid of it altogether, especially since I already invest in SP 500, the fund that tracks exactly the biggest US companies. Another thing about the LifeStrategy fund is its UK bias. Personally, I don't really mind, but many investors get rid of it precisely because of this reason. Next fund on my list is the FTSE All World ETF. This is a global fund, and global funds very often form the core of passive investors' portfolios. Some go totally minimal and choose a less is more approach and invest in a global fund only. Vanguard offers a few global trackers, and the difference between them comes down to the number of shares and fees. So your choice of a global fund will most often be justified by one of those. The one in my portfolio has the highest fees, but the biggest numbers of shares. So I'm sticking with it for now. So the good thing about it is its diversification, of course. And the bad thing, in my view, it's its small exposure to emerging markets and Pacific funds, for example. There is some exposure, but maybe not big enough. And finally, I left the good old SP 500. So the fund tracking performance of the 505 biggest US companies. I like this fund. It's not a great justification for keeping it in my portfolio, but then again, why not? So the good thing about it is that it's established, it's considered a benchmark and has been around long enough for investors to base their predictions on the performance of that fund. But as we all know, predictions are fortune telling, and many investors feel that SP 500 is unbalanced, largely because of a small number of big tech companies that kind of dominate it. For now, I choose to invest in it. So now let's take a look at my portfolio in more detail. So this is my Vanguard account. The value of my portfolio is £119,000, 559.34. Now, most of it is in my pension, in my SIP, and a bit less in my ISA. Let's take a look at my pension. And the transactions. So I added 1,500 on the 10th of April and then another 1,500 on the 5th of May. So that's 2 transactions since our last update. Let's see my investments. I'm still holding on to LifeStrategy 100 in this pension. For now, it's just for fun. I might get rid of it at some point. But the main fund here is my target retirement fund. Performance. My rate of return is 32.8%. It's still going up with some hiccups on its way. Let's take a look at the last month. Not much of growth, but still some. Calculations, so fees, for those of you who love looking at fees. Month by month. So we're looking at the last month. It grew a little bit again. And investments are all the same. So let's take a look at my ISA. These are my holdings at the moment. That corporate bond one will go hopefully soon. Performance. My rate of return is slightly over 30%. And again, with a little bit of down here and there, the trend is still upwards. Calculations, month by month. And again, we're interested in the last 2. It grew, but just a little bit, not much really. And investments, they're actually going to show me all investments I've ever had. So it could be a bit confusing because I did get rid of some of them, as you know. Transactions. Let's change the date to April 2021, so last month. And let's take a look at all the transactions. So as you can see, I sold and switched to FTSE All World, and then again I sold LifeStrategy 60, switched to SP 500, and then again I actually bought some. I think that was reinvesting my dividends. And again, I bought some more. In May. All in all, I contributed £1,000 to my ISA in this month. Let's take a look at the whole portfolio. The holdings are still here, so you can see them, all of them. The performance, no surprises, it's still the same. My rate of return is 37.3. I'm interested in Insight. So, a bit of blended equity, fixed income, no cash really. So as you can see, I'm heavily invested in North America and United Kingdom, but not so much in Asia Pacific, for example, or emerging markets. So this is my top 10, these are my top 10 investments and my sector allocation, and then performance over the last 3 months. So my portfolio is simplified. We know which funds stay, which funds go. What next? Well, I can still see how these 3 major funds overlap and overexpose me to certain markets, especially US and UK, as you could see, but don't exactly reflect global economy. Now, do I care? Not yet. For now, I will continue with these 3. There is no point in endless tinkering, and good enough is my kind of perfect. But if I get a chance to invest in a lump sum this year, I might add another fund or 2. We'll see how it goes. And speaking of lump sums, if you watched my IG portfolio video, which you can find here, you know that I was considering transferring my old ISA to Vanguard, and most of you voted for me to close all my positions and move to Vanguard immediately. So I went with that option, but waited a bit. I closed half of the positions in profit and half made some loss. All in all, I will be transferring £6,700 to Vanguard, assuming IG don't charge me another fee. And I started the process before the end of April, so you can see the progress here. So who knows, maybe I will use that chunk of money for an extra fund soon. Alright everybody, this is what my portfolio looks like in May. Spring cleaning is done and the journey continues. Hope you're making some progress with your investments. Have a great day or evening or afternoon, depending on when you're watching this video. Thank you very much for watching, and I'll see you soon. Bye bye.